When you think of value-added tax or VAT as we know it is almost like a sales tax. And additionally, it adds value to the product.
Essentially, you're saying is that value-added tax is paid by the consumer and remitted to the Inland Revenue Department.
There are three rates when it comes to VAT. There's a 17%, 10%, and 0%.
Welcome to the premiere episode of TaxWise, your ultimate guide to navigating taxation in the Federation of St. Kitts and Nevis. I'm your host, Eliza Mills. Today, we are delving into the world of value-added tax, commonly known as VAT. Joining us is the knowledgeable Mrs. Tonya Lawrence, Manager of the Audit and Investigations Small and Micro Taxpayer Division. Together, we'll unravel what VAT is, who it affects, the different rates of VAT, and how both consumers and businesses can manage these rates effectively. Let's dive in. Explain what VAT is.
When you think of value-added tax or VAT as we know it is almost like a sales tax. And additionally, it adds value to the product. So that's the simplest way of explaining what VAT is.
Once it's collected by the businesses, where are the funds remitted?
Once it's collected by the businesses, they should then remit that amount that they've collected in VAT to the department.
Essentially, you're saying is that value-added tax is paid by the consumer and remitted to the Inland Revenue Department.
Yes, that is correct. Whatever the price is, the business owner or the enterprise is expected to add the applicable rate of VAT to whatever good or service that they're providing. And that makes up the total cost of the good. And from then it's remitted. Whatever is collected is paid over to the department. And yes, in the end, the consumer, the cost is passed on to the consumer. So the consumer pays the VAT and everything that's applicable.
I've always heard of different rates associated with VAT. I know that there's a standard rate, there's an exempt rate, there's a zero rate. Now, what do they all mean, and what is the distinction between them?
There are three rates when it comes to VAT. There's a 17%, 10%, and 0%. Over the years, there have been some special initiatives that have been given by the government, and it's the 13% on building materials, as well as 5% for COVID relief in terms of the commercial rent.
And of course, we've all enjoyed the value-added tax reduced days. That's a special rate.
That is correct as well, because at that point in time, since its inception of having a discounted VAT rate day, the rate has been 5% on whatever VAT day it is.
So explain to me, what is the standard rate?
Okay, what I'll do for you is list for you the difference between someone whose supplies are at 10% and someone whose supplies are at 0. And then anything else that doesn't fit those two criteria would be considered the standard rate of 17%. So when it comes to the 10%, it's paid by hotels, tour operators, and restaurants. And that's the rate of 10%. Now, when it comes to the zero-rated supplies, there is a list in the third schedule of the value-added tax that lists the number of things or the number of supplies that would attract a rate of 0%. It's also a rate charged by any goods or supplies that are not being used in the Federation, but is actually being used outside of the Federation. For example, Port Zante stores, right? Most of their goods, once it's sold to a non-resident, let me make sure I clarify that. It's sold to a non-resident, then the rate would be 0%. So anything else that does not, any other supply that does not fall between 10% and 0% would be at the standard rate of 17%.
All right, so the standard is almost like a default rate. Anything that doesn't apply.
If someone wants to understand it as clearly as possible, if it doesn't fall within the 0% or the 10%, once it attracts VAT, the rate would be at 17.
I've also heard of something called an exempt rate. Tell us a little bit more of that.
When it comes to exempt supplies, persons often mix it up with zero-rated supplies. Now, as I said before, VAT has 3 rates, 17, 10, and 0. People may say that 0% and nothing or no VAT is the same thing, but it is not. Someone who has zero-rated supplies, they are allowed to claim all of the input tax or the purchases they did against those zero-rated supplies. They are allowed to claim all of the input tax.
The purchases that attracted VAT.
Right. When it comes to exempt supplies, there is no charge of VAT at all. So persons are not allowed, businesses, any individual, any person that is registered for VAT, they are not allowed to claim the VAT that is related to an exempt supply.
So that is clearly an incentive for businesses to register for VAT once they have met the threshold as well.
Well, once you have met the threshold, it's a matter of understanding the type of supplies that you offer, because it's very important. If you offer a standard rate supply, whatever the rate at the moment is for standard rated supplies, it has to be applicable at that rate. If you're within the restaurants or the tour operators, for example, then that rate is 10. And the zero rated, you would have to understand what supplies as at zero rate so that you're able to apply that. And then there is a list of exempt supplies that you can find, the ones that, and I think I mentioned before that the zero rated was in the 3rd schedule, but it's actually the 2nd schedule. So let me correct that.
Right,
and the exempt supply, right? The exempt supplies, the 3rd schedule. So if someone is trying to find out what type of supplies they offer, please visit the VAT Act and visit Schedule 2 and 3 to have the clear definition of the difference between a zero-rated and
of
exempt.
course, if there is any uncertainty, individuals may contact the Inland Revenue Department.
That is very correct.
All right, wonderful. Now, for those persons who are registered, what is required of them to ensure that they file on time and pay on time?
For someone who is registered, they're expected to apply the correct VAT rate at the moment when they're filing, as well as keep complete and adequate records to make sure they are very detailed, as well as file an accurate return, and not last, but least, ensure that they have the right, they pay the right amount of tax that they should.
Now, there's a common scenarios. Somebody who is paying has exempt supplies and also has supplies that they will charge at the 17%. How should they handle the tax rates?
Okay, when it comes to someone who sells all of these supplies in terms of whether it's standard rated, zero rated, or exempt, then that person has to understand that there is a term we call the apportionment rule that is in the VAT Act. And it states that if someone is selling supplies that in all of the categories, then there's a formula that must be applied, because we remember that that a business is not allowed to claim any input tax that is related to an exempt supply.
Right.
So they would have to apply that formula in order to ensure and understand what amount can be claimed for input tax.
What if, when all is said and done, the taxpayer did not report the right amount of VAT to the Inland Revenue Department? What's the recourse?
And if someone does not pay the right amount of VAT, there are several penalties and fines that person could incur. One of them being the 25% on the reporting penalty, or the 1.25% interest that can be applied, and there's also a 10% late payment penalty. So there are penalties in place, which we always hope that we don't have to impose.
Absolutely.
But should anyone breach, for lack of a better term, any portion of the VAT Act when it comes to filing, then these things are in place.
It's really, if you were to use a common or colloquial jargon, an ounce of prevention is better than a dose of cure, right?
That is correct.
So individuals, we want to just encourage all persons concerned to file on time, pay on time, ask as many questions as they would like. And then, of course, if there are any compliance issues, persons may feel free to contact or any issues as it relates to the matters that would affect their compliance, contact the Inland Revenue Department. Now, when all is said and done, who can claim? Is there a refund process? Tell me a little bit about that refund process and who can claim.
In terms of a refund, if for any tax period, and a taxpayer finds themselves in a credit position, and in order to be in a credit position, it would mean that your input tax was greater than your output tax. Now, there's a rule in the VAT Act that states, and that would be Section 62. It speaks to credits and tax credits and refunds. And it states that if you end up in a credit position for any period, then that credit must be carried forward for 3 months, and then it can be claimed in the 4th month. Okay, that's important for persons to understand that rule. Additionally, for persons whose zero-rated supplies are 50% and over, then the law allows for them to claim as that credit becomes due. So they have that month to month. So if for that period in this month, they found that they're in a credit position, then they can ask. But your zero-rated supplies has to be about 50% or more.
All right. What happens to somebody who just happens to overpay?
Okay, and an overpayment is different to a credit in terms of input versus output.
That's right.
If you overpay, what happens is that credit would be used for your upcoming filing period.
Great stuff.
So there's no need to file for that.
Since January, a new rate has been established. That is the 13% reduced VAT rate. Now, what are the requirements? What is expected of the public, all those businesses that have registered? What is expected of them when it comes to filing?
Okay, what is expected is that they understand mostly the time of supply rule. The time of supply rule is important because it allows you to understand and be able to apply the correct VAT rate at that moment in time. So what the time of supply rule states is that it's the earliest of the goods being delivered or the services being completed, an invoice is presented, or consideration for the good or service has been applied. So once you are thinking about what the rate should be between December and January and going forward for the 6 months, you must understand the time of supply rule.
So how then would you qualify or define time of supply?
A time of supply is a point in time when that good or service that you are providing, applying the correct rate to it at that point in time and understanding the rule that comes with it, which is what I stated earlier.
Okay. What other requirements are there for the businesses when they're about to file?
When a business is about to file, they have to first understand that this is the standard rate that they are accustomed to of 17%, that these goods for the first 6 months or for the 6 months period, it will now be at 13%. So they are expected to adjust their prices on the shelf to accommodate for a reduced rate of 13%. Their receipts must show that the VAT rate for this moment in time is 13%. That must be clear.
And of course, Inland Revenue established a deadline for that. I think that was on the 19th of February. So we're hoping that all individuals would have done that by this time. What about claiming credits? What do they do?
Well, as I stated before, when it comes to a credit, they can, if their supplies are 50%, the zero-rated supplies, are 50% more. More than 50%, then they can claim their refund in that month. or that tax period. And if their zero rated supplies are less than that 50%, then they would carry forward that credit for 3 months and then claim it in their fourth month.
How is the tax rate or the VAT payable calculated?
When it comes to calculating the VAT, the businesses are expected to have their price and then add whatever applicable rate of VAT there is at that moment in time. So anything prior to January 2025 would be at a rate of 17% outside of the discounted VAT rate days, or for persons who, well, I wouldn't use a 10% in this case. So we just focus on the standard rated card. That's the rate that has been reduced. So for persons who have any sales prior to that time, and like I said, you have to pay attention to the time of supply rule, but anything prior to January 1st, 2025 would be at a rate of 17, and any good or service applied after January 1st and coming forward to June, that would attract a rate of 13%.
So basically, if I'm to summarize what you would have said, just to make sure that we understand, all businesses should determine the rate that they ought to be filed for their taxable sales.
Yes.
They should claim all the tax credits,
Right.
as well as pay the applicable VAT, right? And not to mention file and pay on time as well.
That is correct.
All right, wonderful. Now, let's go back to the time of supply rule. What special arrangement exists for time of supply with respect to credit and layaways?
When it comes to credits and layaways, in terms of the time of supply rule, it states that for credit agreements, for goods supplied under a credit agreement, the time of supply is the date the agreement commences. When it
Right.
comes to the layaway agreement, the time of supply under a layaway agreement occurs when the goods are delivered to the purchaser.
Reiterating this because I think that is important. When does the time of supply typically occur? I think that there are three conditions.
Yes. The rule states that it is the earliest of the goods being delivered or the service being completed, the invoice being issued, or consideration for the good or service was given. And that's the rule to the time of supply.
Or when payment was received?
Well, consideration. And we don't want to
Consideration.
leave it as payments because we want persons to understand consideration covers payments, covers fees, covers partial payment. So the act just speaks to consideration.
Okay, wonderful. All right. And so could you now provide some examples that we have come across as it relates to time of supply? Let's deal with it by sector.
Mm-hmm.
Let's think about the retail sector.
If someone purchases an appliance, for example, so went into one of the hardware stores or one of the retail stores and they picked up an appliance or good, then they picked it up in December. If they were issued an invoice in December, so they picked it up and they also were issued an invoice, the rate is at 17%. Now, if someone wanted to get a particular service done and they made arrangements to have that service done, however, the service was not completed until January, then the rate of VAT applied to that service would be 13% because the service was completed in January. Yes, so when it comes to the 13%, the reduced rates, it's important for persons to understand the time of supply rule, like I stated before. So if that good or service, whether partial or in full, occurred in December and or January, they have to understand which part of the time of supply rule applies to the situation or to the scenario. So if a portion of the service was done in December, then that attracts the rate at 17. Then if it continues over into January, that portion would attract a 13%. And if anyone is unsure, it's always wise to reach out to the department, and we can gladly provide you with the information or details that are necessary to assist you so that you are not unsure about what applicable rate to apply.
Especially as it relates, this any error would affect their compliance, and we don't
course.
necessarily want that to happen.
Of course.
Now, there's something that I have observed while shopping, and this applies to individual consumers. Now, consumers, we go into the shop and we pick up items that has perhaps marked goods on it. Now, why is it important that the things that we buy are clearly marked on online and outlined on our receipts?
It's very important to state what product that business or that service that the business is offering, right? One, the VAT states clearly how your invoice or receipt should look and what should be displayed on your receipt, and that's the name of the company, the address, the taxpayer identification number, and also the applicable rate of VAT at that point in time that good or service is being offered.
Right.
In terms of returns or refunds to be issued from the business's end, it's very important that if someone is stating that they need a refund for or to exchange something, it's wise to know if that product that they are trying to exchange or return was sold on that day, and if it's sold by you as a business as well. So it's very important. And for the department, should you have to get audited sometime in the future, it's really important for us to, have a clear view of what that receipt is saying, very detailed.
This becomes important as consumers, having checked their receipts, act as somewhat of a compliance officer that would aid in ensuring that the businesses are compliant. And once there is compliance from that end, businesses ought to, the natural thing was that they will file their taxes. I think it's important as consumers that we pay attention to our receipts. Receipting is important because what it means is either that the businesses, as human beings, we tend to do what we are allowed to get away with.
Mm-hmm.
So some persons are generally compliant, others may need encouragement. And so checking our receipts is a check mark in the process that will allow individuals to file the correct amount of VAT that is reported, because as you would have noted before, there is some checks that Inland Revenue does, and there is a chance of individuals getting, being this, or for lack of a better word, discovered, right, if they are underreporting. And so checking your receipts translates into the businesses paying their fair share of taxes that they would have collected from you, and in turn, our federation will benefit from essential services that the tax help to contribute to. So I'm encouraging individuals to just file, to look at the receipts, and businesses to file and pay their fair share of taxes that are collected from consumers. What's your take on that?
Oh, that's a very good point. We're encouraging consumers to pay attention to your receipt. It's not about not necessarily the cost of the item, but ensuring that you are charged the applicable rate of VAT. So you understand that anything prior to January 1st, 2025 would attract a rate of 17. And then now it should, from January 1st, 2025, and for the first 6 months, it should attract a rate of 13%. It's very important for businesses to ensure that their receipts are clear and that consumers can understand what the receipt is saying, as well as a consumer should pay attention to the receipt, and they can ask questions. They have a right to. And if they are uncertain or unsure of the receipt and what they paid, they can always reach out to the department, and we are willing and able to assist and to help to clarify what they may be seeing on a receipt.
All right. Do you have any closing remarks that you'd like to leave?
Sure. What I want persons to understand is, like I said before, pay attention to your receipt. Businesses, ensure that you are, giving the right receipt, an accurate receipt, and that it displays the VAT amount clearly. Also, in terms of filing, I don't want businesses to get confused with the building rate of 13% and the standard rate of 13%. They're both different initiatives. The building rate of 13% is applicable for persons who are selling supplies to first-time homeowners. When it comes to the 13% standard rate supplies, that's the rate now on goods or services that attracted a rate of 17%. So in filing, I want to ensure that the department has adjusted the form so that it clearly shows that the standard rate for this moment in time would be at 13. And then the building rate is at 13. So once you're reading the form properly, whether you're doing it, and right now we're encouraging all our persons to file online, you're understanding the correct line. And if you have any doubts, please reach out to the department.
Well, thank you so much for helping us to clarify the issues surrounding that. And we're encouraging all our viewers to be tax wise.